Where is the Jacksonville housing market headed in 2023? Hey, Mike Rolowitz here, 904 Home Guide team, eXp Realty in Jacksonville Beach, and I'm here to answer those questions and do a quick look back at 2022. So this video is interesting because last year I broke out the crystal ball and made 3 predictions. Prices will continue to increase in Jacksonville? Check. Number 2 was we need to really keep a close eye on interest rates. At the time I taped that, rates were still in the mid-3s. They spiked more than we expected, which did take the foot off the gas in our market. And the third prediction was that Jacksonville was still going to be a big inflow and sought after market. I give myself a check there. So going to do a real quick breakdown looking at 2022, December of 22 versus November of 22 and December of 21, looking at a couple of our big matrices and metrics that we look at across Northeast Florida, specifically St. Johns and Duval County, where our team does most of our work. And also break out the crystal ball a little bit for 2023 and what we're seeing thus far. So first, we'll drop the stats over here for you. Median sales price, looking at single family homes, St. Johns and Duval County. Almost $390,000 is our median sales price for December of 22, up 9% from December of last year. So again, I predicted we're probably not going to see double-digit growth forever. It's starting to taper down. We're starting to plateau, I would say. But actually it's up 2.6% from November. So we're still seeing moderate appreciation. Some of the submarkets are a little bit higher, some are a little bit lower, but it's an encouraging sign. Our closed sales still continue to decline. Not as many homes are selling, so that number's off almost 40% from last year, almost 1,200 sales that happened this December, but up 10% from November. So some of the fuel seems to be coming back into the market. Median days on market, we're sitting at 47 days. That's up 113% from this time last year when we were still in the feeding frenzy and multiple offers and all that sort of not fun stuff for buyers at the time. And that's up fractionally, well, a little more than fractionally, 15% from November. I think what's been interesting is our inventory came like this. It went up really, really fast. It's plateaued, and now it's actually starting to trend back down. So we're still in a constrained inventory environment here in Northeast Florida, which still keeps this as a seller's market. Again, just not as robust as it was. That wasn't sustainable anyway. So it's a welcome reprieve for buyers. And now sellers are just having to get a little more realistic on their pricing and making sure the home is showing ready at all times. So we're at 3.1 months of supply of inventory. That's down 12% from November. So going forward, I see there's probably going to be fewer and fewer homes because so many people are locked into great interest rates or own their homes outright, and they don't want to go sell that home even though they're sitting on a ton of equity and pay an interest rate in the mid-6s where we're sitting right now as I tape this. So that's something to definitely think about. Now that 3.1 months of inventory, it feels like a balanced market because a year ago it was 319% less. We had about a month of inventory coming into 2022. So coming into 2023 in Northeast Florida, still a seller's market, feels more like a balanced market because offers that we're writing on behalf of our team, we're still able to ask for and sometimes get under ask offers, concessions on closing costs or rate buy downs, much more room to negotiate repair requests, post inspection to keep deals together. So quick predictions for 2023. I think in Northeast Florida, you're still going to see prices appreciate. I'm guessing somewhere in the 3 to 6% range across our MLS. Will there be some markets where that median price goes up more? For sure. I would love to see inventory increase. I just don't necessarily see it happening for the reasons I mentioned earlier. Too many people have too good a deal right now on the home that they're in. So we're in more of a needs-based market than we were a year or two ago, where people we're more freely making those moves to cash out on that equity and then jump into an interest rate in the 3% range. And finally, prediction-wise, interest rates, I think buyers are going to understand 5 to 7 is going to be that new normal. Tomorrow, inflation numbers are going to drop. They're going to come down a little bit as that moderates, as that comes down. The mortgage rates will flow downward with them. I just do not see us getting back to 3 or even 4% rates. But by being creative, by working with our lender partners, by working with sellers and trying to make deals work, rate buy downs are still a good way to work around that and still achieve the goal of home ownership, get that equity, start building that equity. So would love to hear your thoughts. Drop a comment below on whether you think I'm crazy or whether you think the market will continue to flourish. One little bonus PS point, National Association of Realtors, and this was in a prior video, named the top 10 markets to outperform in 2023. Jacksonville, number 8, only city in Florida on the list, and Forbes recently ranked Jacksonville as the number 2 metro area to live in Florida, and we're still seeing it. We're still taking referrals and still welcoming people to our area and here to help however we can. So any way we can help, you just let me know.